Hooty hoo, all my stock market gamblers. Welcome today. It's Monday. Stock market's back open. And guess what? We got an update going on. The Dow was actually up about 700 points. NASDAQ was almost up a couple hundred. They started to pull back a little bit now, but this is the 8th week in a row if we have a down week. We have 7 down weeks in a row so far. Is this one going to bounce? I actually think we're going to bounce big this week. We'll see if it happens. Now, today's Monday. It's just an early start. Yes, we're bouncing 600 points on the Dow, and that's nice. Now, why do I think we're going to bounce? Well, the last couple of weeks, we've had what's called bottoming tails. Okay, it's a bottoming process where the market goes down, and then it recovers back up, and leaves this little tail. Did it again this week, leaves a little tail. These are bottoming tails. It's a bottoming process. Now, here's what's also interesting. Okay. All right, so we got the RSI and the MACD, right? These are stock market indicators. So as the market's been going down, these indicators have been going down and making new lows with the market. But here's what happened last week. The market made a new low, but the RSI and the MACD did not make new lows. In other words, there's a divergence between the stock market and the indicators, the RSI and the MACD. They stayed up. That's why I think we're going to get a bounce. Now, a lot of people saying, well, this is the crash, Mike. We're going into a bear market. Now, I don't think so. Now, granted, technically, yeah, I suppose the NASDAQ is in a bear market, but this has been orderly, right? For the last 5 months, we've continually gone down, right? We've had a downward drift to the market, and it took 5 months to get the S&P down 20%. Look, that's not a crash. When the crash happens, you're going to know it. I mean, it may go down 20% in one day, not 5 months to get down 20%. This has been pretty orderly. Now, granted, 20% is a big loss in the stock market. We've wiped out $6 trillion of household worth. People are feeling their net worth going down. Now, let's move on to, the real estate market. Now, are they tied together? Well, a lot of people are starting to, they say their down payment has been smushed in the stock market because that's where people keep their down payment, where they're going to go in and buy houses. But a lot of people aren't buying houses yet. As a matter of fact, I think the housing market is going to feel massive pain. Massive pain is coming for the housing market. Why? Well, we're getting these things that are called price reductions. And price reductions wipe out people's equity. And when their equity gets wiped out, they get buyer's remorse. Look, at a lot of people, they buy with FHA loans, and these are 3 and 4% down payments, right? It doesn't take much to wipe out a 3% or a 4% down payment. That equity gets wiped out, and all of a sudden the buyer's what's known as upside down. They owe more on the property than the property's worth. They're upside down, and buyer's remorse sets in. I'm telling you, things have changed. Now maybe prices aren't crashing yet in your area. Now, what is crashing is multiple offers. Multiple offers have almost gone away. I mean, they've really reduced. I mean, if you get 2 offers on a property right now, you're very fortunate. But there used to be 5 and 10 offers. These multiple offers have all but vanished, right? So here's a typical example. All right, so Billy Bob down the street, now he sold his for $2.2 million, but the market's changed. So the agent tells the seller, well, let's put yours on a little bit under that. Let's put it on $2 million. Now, these are prices in my area. Your area may be, it may be a lot lower than these. I live in a very exclusive, very rich area, Silicon Valley. The prices are propped up by Facebook, by Google, by Apple, by all these job market that props up the prices. We're in the $2 million area. But the $2.2 million that Billy Bob sold his for, the next guy comes in at $2 million. Well, he doesn't get any offers, and he starts to panic. And they panic really quick. It used to be, wait 2 or 3 months. If they don't have an offer in a week or 2, they reduce it, and they reduce it a lot. In San Jose, the average price reduction is $93,000. But this case, he's worried Billy Bob made it out, and I'm not going to make it out. So So he reduces his price from 2 million down to 1.8 million. All right. Well, in the old days when you put it on 2 million, you'd get bid up 2.1, 2.2, 2.3, 2.4. But now he put it on 2 million and he'd already dropped it to 1.8 million and still no offers. Well, guess what? He waited another week or two and he finally gets this offer. It's at 1.7. 1.7. He doesn't know what to do. He's in a panic. It's the only offer he got though is 1.7. So he decides, okay, I'm going to take it. I'm going to take it. Now that's the new comp for the neighborhood, 1.7. So the next guy that comes on, he's hoping to get 1.7, but he may not get 1.7. He may only get 1.5, 1.4. Look, it is starting to come down, and this is wiping out a lot of equity from people that just bought in the last year or two. Now, if you bought in the last year or two, you may start to get buyer's remorse. Now, personally, here's what I think happened. Okay, so we had this run up to the 2008 real estate bubble, right? It took about 40 years to go up about 40%. From 2004 to 2008, the market just exploded higher. Why did it explode higher? Well, we had these subprime loans. These subprime loans, we all know what happened, right? Okay, so all these people, they didn't make their payments. And so 2004, 2008, we had this big increase, but then they started to drop off. And for the next year, prices started to come down. And what did the Federal Reserve do? They said, we can't have this happen because everybody's got buyer's remorse. We got to come in and pop the bubble up bigger. They came in 2009 with $3.6 trillion of stimulus money to pop up, specifically to pop up the real estate bubble again, to blow the air back in it, get that bubble bigger, right? Okay, so now let's think about what's happened just recently. Well, last time it took about 4 years to go up 40%. Well, we've done that in 2 years. We went up twice as fast in this current bubble, twice as fast, okay? So we just exploded higher, 20% and 20%. We went up 40% in less than 2 years. Now, it's my opinion that this is still an extension of the 2008 bubble. The 2008 bubble was never allowed to deflate, never allowed to pop. They pumped in the money. They pumped in $3.6 trillion. Now, in the last 2 years, we pumped in over $6 trillion. Granted, we pumped in twice as much money, and that's why the bubble went up twice as fast. It did it in only 2 years. Now, this is not going to end well. This is not going to end well. Look, we're coming into, let's just call it a recession. We've had 1 quarter of negative print, meaning the GDP went down, and we're probably going to get a second quarter, which by definition is a recession. Now, they'll all tell you, if you listen to government statistics, that unemployment rate, what is it, 3.6%? Really? I mean, that's just crazy talk. I have so many friends that aren't working right now. It's not 3.6, it's much higher. But let's go with their number, 3.6. What happens when you head into a recession? Well, guess what? People lose their jobs. When the economy starts to tank, people lose their jobs. It's just part of the beast, right? And now in the last 2 years during the pandemic, let's say, we've not been allowed to do any foreclosures, any evictions, and we printed up $6, maybe $8 trillion to pop up the markets. And believe me, these markets are propped up, right? Well, the air's starting to come out of the stock market, but I do think we're going to get a bounce this week. But the air is really coming out of the real estate market. Look, we had rates at 3% back in December. We're going into May and we're at 5.5%. for 30-year loans. But don't worry, we're going to revert back to the subprime. We're making loans with 560 credit score. You can now get an adjustable rate mortgage with negative amortization. We don't learn anything, do we? No, we really don't. This is not going to end well. That's just my opinion. Now, of course, in your area, the houses never go down there because you got multiple offers. You got people bidding on properties still, so it's going to stay up. But all the surrounding areas, I'm telling you, they're going to come down. They're going to get pretty hard. And I do think now in 2008, what did we drop? We dropped about 30%. Now, I mean, in this housing bubble, I'm looking for 40, 50, maybe even 60% crash in housing prices. Now, people will tell you I'm crazy, and I hope I am. I want it to double from here. I'm a real estate broker. I want it to double. I want to make twice as much when I sell a house. I really don't have any, skin in the game as to why I want to tell you that the housing prices are going to go down, except to warn you. That's all I want to do, and I want to warn as many people as I can. So maybe you will recommend this video. You'll share this video, because I'm telling you, prices are starting to come down. Things are starting to change. Massive pains coming for the housing market, and what is crashing is multiple offers. They crash so hard you can't find them anywhere. If you get an offer on your house, consider yourself fortunate. You'll be able to get out. Now, maybe you don't get what Billy Bob down the street got, but at least you can still get out. This is just my opinion. I'm not a financial advisor. I'm a broker. I'm a real estate broker. I'm an economist, and when I put these two things together, I see that stock market getting weak. I see houses. It takes time to play out. Look, I love real estate. I think there's going to be some great opportunities, but those opportunities aren't going to come till the end of 23. Maybe 2024 is where these buying opportunities are going to come, where you can get a deal of 30, 40, 50% off. It's going to happen. I mean, that's going to happen. You cannot keep this propped up forever. They're going to try. They're going to throw everything at it. They're going to print more money. They're going to get spending packages. They're going to give away houses. You get a house. You get a house. You get a house. Everybody gets a house. They're going to try everything. I don't think they can do it. We'll see if I'm right. I'm Tall Mike. You like this stuff? Give me the thumbs up. Get out there, everybody. Have a great Monday, and we'll talk again later in the week. Hit that subscribe button so you get notified. Bye-bye now.